Welcome to our show, World This Week. Ladies and gentlemen, today we have with us Mr. Peter Sand. He is the Chief Shipping Analyst at BIMCO, that is Baltic and International Maritime Council, a very well-known name in the global shipping industry. Welcome to our show, sir.
Thank you so much, Captain Mishra. It's a pleasure to be back on your show. Well, the first time for the World This Week, but I think some years ago you and I had a wonderful discussion also on the global shipping industry. So and thank you so much for many years of good cooperation. It's a pleasure to be here with you today.
Thank you, sir. Sir, we will request you to share with us the overview of the shipping markets this week.
Well, thank you so much. I think it's fair to say that the world is somewhat in a special place right now, not only with the COVID-19 outbreak, of course, but certainly also, I mean, with the blast in Beirut that have attached or caught everybody's mind, at least here in the larger region of Europe, and as you and I discussed just before, also adverse weather conditions in Mumbai and India is causing a bit of problems also for you guys, but we cross our fingers that everything will be all right this time around. As you all may know, I'm focusing on the global macroeconomic development and what that means for shipping. We do so in order to benefit BIMCO members and the wider shipping industry. So I'm pleased to share with you our latest thoughts on that today. And I must say we're positively surprised in some parts of the developments that we see, but we're also painfully aware of the challenges that is lying ahead of us in coming months and years, to be honest. Because if we go by the most recent numbers from World Trade Organization, they estimate that world trade was down by 18.5% in the second quarter of this year. And I think it's fair to say that if you translate that into to the world of container shipping, for instance, we see volumes being down by 6.8%. So fortunately, it isn't a like-for-like comparison with the overall decline in world merchandise trade, but having box volumes falling by 6.8%, that's obviously massive. But that brings me to what have happened really exciting in the container shipping industry this week, because we certainly see that the liner industry have managed to cancel sailings, to blank sailings, to basically establish a new and much better relationship between supply and demand on the high volume long distance routes as well as the interregional routes and north-south. So everywhere you look, we have actually seen the combination of a dramatic fall in volumes, but an equally dramatic rise in spot rates. Long-term contract rates are still more or less unaffected, still moving sideways, delivering the bread and butter for many liner companies. But those of them who are mostly exposed to the spot market have really enjoyed seeing freight rates from Far East Asia to the west coast of US this week blow through the threshold of $3,000 per FEU, and that still holds 1 week into to August, even though we're not expecting a growth in volumes for the peak season this year, as we're basically not expecting a peak season to develop at all. But I guess from the profitability perspective of the liner business, having an increase in spot rates when you compare $3,000 per FEU in early August this year with early August last year, that's up by 78.5%. Also, spot rates into to US East Coast is up significantly, not to the same extent, only in the range of up 21%. But it is still a little bit of magic that has worked out for the liner businesses, as they have cut capacity sharper than demand has been cut. If we move into to some of the yeah, please, Captain Mishra.
Do you expect it to continue? Do you expect this trend to continue also next week?
I think what we're seeing now in the liner business is like a reintroduction of some of the blank sailings, meaning that we have seen at least a little bit on Far East to Europe, a little bit downward pressure on freight rates. So some of the gains have been handed back to the retailers, to the cargo owners, but still it hasn't been a massive drop. So for next week, we expect the levels to remain high, and that's very positive, as we're also seeing volumes still at least growing quite nicely in the intra-Asian market, which we all know is the world's largest container shipping market, and basically, as we see it, an indicator of what is leaving the Far Eastern region for Europe and North America and South America, for that matter, a month or two later. So it's very positive that we only saw volumes being slightly down in June for the intra-Asian region. So we see positively the impact, at least on spot rate levels, but we must not be blinded by the positive effect on freight rates. If we look at the impact on charter rates, obviously the pure tonnage providers into our container shipping industry have really been dealt a massive blow, seeing charter rates for 6 to 12 months drop by more than 50% in the time span of March to May. We have seen somewhat support in recent weeks to that. Fingers crossed it will continue, or at least not re-enter a new decline, as we are seeing positiveness, at least for the coming weeks and month of Q3 for container shipping.
Right.
If we look at the dry bulk sector, I think it's fair to say also that the dry bulk sector is performing well, and more than well, I must say, because the impact from China seems to be overwhelming in terms of bringing back profitable freight rates. I guess many of us can recall the dreadful rates in the later part of Q1, approximately February and March. But following that, the Chinese stimuli, in whatever form it has taken, have certainly brought high import volumes around, and that has basically also brought a lot of ships to the ports of China right now, where we see congestion up in at least July, somewhat coming down right now, but obviously that has been that's the downside, you might say, to such a one-sided and impressive growth rates that have surely also brought around long distance hauls. We focus very much on the grains exports out of South America, for instance, where we see not only soybeans but certainly also other grains finding their way through the troubles that they are facing right now, managing their COVID-19 challenges. It has been impressive to see exports out of Argentina and Brazil perform very well during these, for those countries, very difficult situations in terms of the overall health situation. So that's extremely positive. But we must also, if you follow BIMCO news, I'm sure you did also see that only yesterday we published an analysis focusing on the fact that the world order book for dry bulk tankers and container ships have now reached a 17-year low. And that is very much due to a lack of conscience and lack of confidence, mostly not conscience. I don't think they are unconscious out there, but lack of confidence, at least in the immediate future, with almost a complete lack of new orders being placed. So the drop in order book, of course, is a result of very few orders being placed in the first half of this year, in a combination with quite strong output from global new building shipyards, where we have seen more than 30 million deadweights on being delivered for dry bulk only. So that's extraordinary in many ways. I mean, we have seen demolition yards in India, in Bangladesh, in Pakistan also being completely under lockdown, and we saw back in April more or less no ships being demolished, and that have surely turned around with more than 50,000 TEUs of container ships being demolished in both June and July. So there are good things working also for the fundamental balance of the market, as we are facing a drop in demand this time around. The industry must act also in order to counterbalance the drop in demand with a slow as possible fleet growth, at least in nominal terms. I think that brings us around to the final point I would like to make this time around for the tankers, of course. As you know, we are covering the main shipping sectors because that's where BIMCO members predominantly own and operate ships, and we must say the tanker market have been a world of their own during April and May in particular. Not only due to COVID-19 outbreak, but mostly due to the oil price war that we saw with the breakdown of the OPEC Plus alliance, bringing a huge amounts of cheap oil available to global refiners, and we have seen that. In particular from Saudi Arabia being distributed in the first cases to North America, but also later to China at drop dead prices. Right now we're seeing a more normalized market. We're also seeing freight rates from Middle East into China for VLCC being as low now as $18,250 per day. That is loss-making levels, and we are expecting hardship for the oil tanker business for the coming 12-18 months, with the winter market 2021-2022 as being the place to scout for optimism. So it is a market which is challenged in different ways and by different aspects across the board. Not only the health situation, but certainly also the drop in oil demand, and of course the overall uncertainty on where are we going in terms of world trade. So a lot has happened this week in the world and maritime shipping, Captain Misra, and I think it's been interesting as always to share our thoughts and our views, and I look forward to your upcoming shows to see how the world of economics and shipping develop.
Thank you so much, sir. This information has been very, very vital. As you know, in this part of the world, we have several ship owners who are actually, they own bulk carriers and also tankers, you know, the Indian shipping. And also in this part of the world, when I say also means Asia. And we have many operators, many charters. So this information is obviously very, very important for us. So very briefly, if you could also share with us some of the main headlines you think which were important for this week.
Well, I think the overall development in geopolitics is surely on the headline in this week, but certainly also in coming weeks, because geopolitics is one of those major trends that we see will disrupt the world of shipping going forward also. Potentially those kinds of disruptions bring around higher freight rates, because some owners may be taken out of the market, creating a lot of uncertainty on who you can do business with as a charterer and as a cargo owner. Obviously, someone will be caught out on this regard. I'm not talking about only relations between US and Iran, but certainly also ongoing trade war issues between US and Europe and US and China. Those relations we following extremely close, and that will surely be one of the things to look intensely out for in coming weeks and months. Absolutely. So those are some of the things that we look out for from BIMCO House. But in particular, outstanding news from the past week. I think it's fair to say that we are not overwhelmed by breaking news during this summer lull. But allow me just to bring a little bit of update on the IMO 2020 sulfur cap, which seems to be not all forgotten, but certainly something that we do not discuss to the length that we did 1 year ago and in the lead up to January 1st, because what we see in terms of sales of fuel, if we look at the world's largest bunkering hub in Singapore, for instance, it's absolutely certain that the oil majors have decided that very low sulfur fuel oil is the product that they would like to deliver to the global shipping industry, and it takes now up more than 80% of total sales in Singapore, low sulfur fuels, including marine gas oil, of course. But it also points to the fact that we still do see a huge take-up in scrubbers. Basically, if we look at the uptake of the crude oil tanker fleet, the capacity in terms of deadweight ton that is now fitted with a scrubber is close to a quarter. And for container ships, we're getting more than a quarter of the capacity now being fitted with the scrubber. So those who called the demise of heavy sulfur fuel oil half a year ago, we did not. I must say we argued that the market would have a significant size simply due to the fact that those who install scrubbers are also the gas guzzlers of our industry. And I think it's fair to say also that next week, stay tuned at BIMCO Market Analysis, because we will give you more insights and a full update on this. This is just an early brief, so hopefully that will provide a little bit of world this week for the coming week. I think it's exciting to cover a lot of ground, and I hopefully for all of you who have been following out this morning that you find it interesting and relevant for your business.
Thank you very much, sir. Thank you very much, and have a very nice weekend ahead. Bye-bye, sir.
And the same to you. Thanks for inviting me. Very kind of you. Take care.